Well, welcome everybody. We're excited to bring you this exciting emergency marketing webinar. For the next 35 minutes or so, you are going to be blown away by the information that we share during this webinar. We are action-packed for the next 30 to 35 minutes. We had to add in an extra update on the special mortgagee letter that was just released, and we're going to talk about this special marketing opportunity at the end. We didn't have some time budgeted for that, but we know that there's going to be a lot of questions about what this opportunity is and how you can begin to market for some purchase business, which has just not been a huge business opportunity here in the last 2 to 3 years, but now because of refis going down and rates going up a little bit, we've opened up a new opportunity, and it's exciting to be able to bring you this opportunity. And today I have a panelist on this particular webinar that is an expert in direct mail marketing for home mortgages. Jeff Bush is our panelist today, and Jeff has got an extensive background in terms of working within the mortgage industry and in doing direct marketing. He's got over 20 years experience. He's mailed over 1 billion direct mail pieces, and he's owned a mortgage company that actually closed 5,000 loans from 2000 to 2007. So he understands how to generate business with direct mail marketing, and he's been doing it for some of the largest mortgage companies in the country. Because we've got so much great content today, we have muted the lines, and we've got over 140 people registered for this webinar, and so we are going to keep the lines muted through the call, but you can ask questions using the GoToWebinar control panel. So if you have a question for Jeff about the marketing strategy that we use today, if you've been on one of our webinars before, we are very educational. We're not here to sell you a bunch of stuff. We're here to show you what's working, what's not, and to answer your questions about direct marketing strategies. So please submit your questions using the GoToWebinar control panel, and we'll ask those in the order that they're received. And if we get a lot of one particular question, we'll likely try to address all those questions in one particular answer. But Jeff, welcome to the webinar today.
Yeah, thanks, Dave, for having me. Excited about it.
Well, talk a little bit about this Mortgagee Letter 2013 and 2013-26, and just talk a little bit more about where you see this going, and then we'll get into the details as we wrap up the webinar today.
Yeah, so reading through this letter, obviously, FHA HUD is going to allow people to buy homes with an FHA loan 1 year out of bankruptcy, foreclosure, or short sale if they have a good reason, their income dropped, before they went bankrupt, short sale, foreclosure. So, the market has been moving from refinances to purchases, and a lot of my clients have been calling saying, hey, what do you got for purchase loans? How can we market and get buyers in here? And with, HUD announcing this August 15th, effective right now, it just opens up, basically what they just did is put about 2 million people in America back into the purchase market, so now we've got buyers. And over the last 6 months, inventory was so small for homes for sale that it wasn't even worth doing a mailing to get buyers because there was no inventory, but that's recently changed. Now there's inventories like quadrupled in the last 30 days since rates went up and prices went up. So this could be the perfect storm, financing for buyers that have 12-month-old BK short sale foreclosure. We've got inventory now, so I'm pretty excited to present kind of a purchase marketing campaign that can bring a bunch of buyers in that you can do purchase loans for as the refis start to slow down. So we're going to cover that at the end. There's still some big opportunity out there for refinance, and we're going to mainly talk about that on this webinar, but I'm excited about this purchase campaign. I just did a couple of mailers that were real successful.
Well, you've really created your marketing expertise out of finding that next developing niche, and we're going to talk about some of those next developing niches or the current niches that are just still a hot market. So we're going to cover a lot of information, but let's just jump out and talk about some of the strategies that are working right now, Jeff, and maybe talk a little bit about some of the clients' successes that you've had just recently and why they have become so successful.
Well, we've had a big change in the market. I mean, obviously, I've been mailing, millions of letters for mortgage companies over the last year for FHA, VA streamlines and HARP. And, with rates jumping up a point, streamlines kind of ended overnight. So we've got to look at, who's still out there that's paying over 5% interest rate or paying mortgage insurance where they can, refinance and actually save $200 to $1,000 a month on their mortgage payment. Who's still out there that we can mail to? So, we developed some new direct mail campaigns that are targeting, FHA borrowers that have 20% equity. We can take them out of their FHA loan, put them in conventional, eliminate their mortgage insurance, which might be, $200 to $600 a month, and we can also target, FHA borrowers that are paying higher interest rates. So, this chart that we're showing on the screen is basically showing the increase in property values around the country. These are the top, 10 markets. I mean, Phoenix, Arizona is up 47%. So these people that bought their home with an FHA loan 1 to 3 years ago, a lot of them have 20% equity, and we can get them out of FHA, put them in conventional, lower their rate a little bit, and get them out of the MI. So this is kind of, what we're showing. Florida, Nevada, there's different parts of the country that just have huge appreciation in the last year.
We'll talk a little bit more about FHA conversion and the numbers that were showing up on the screen in terms of data.
So we've got 250,000 people that are in an FHA loan paying a high rate, a high mortgage insurance factor, that have 20% equity in their property. So this is kind of the universe that we have to mail to, kind of the sweet spot on the data. It's interesting, if I take the LTV up to 85%, this number almost doubles to 500,000. So some of my clients have started here and then moved into some people at 85% LTV, selling them lender-paid MI loans at 85, or FHA cash-out loans at 85. So a lot of different ways to take these borrowers when they call interested in lowering their payment or taking a little bit of cash out to pay off some credit card debt. So it's just everything's kind of been changing over the last few months. And
this is one of the most interesting slides. We always get a lot of feedback on this, just in terms of interest rates and the times of years, the averages that they had. Talk a little bit more about where you're targeting your marketing right now, Jeff, with FHA borrowers and the specific years that they obtain their mortgage.
So what we're looking at is a chart directly from HUD showing the average interest rate by month and by year for all the FHA loans that were recorded, backing out, reverse mortgage HECM loans, because those are so different. So if you look at this chart, the average interest rate in 2009 on an FHA loan was 5.63, and then in 2010 it was 5.25, and then 2011 it dropped to 4.66, and 2012 was 3.97. So we take these interest rates and we actually built them into our mailing list, so we know the average interest rate these borrowers are paying depending on what month and year they're loan funded. And then we built into the data also the mortgage insurance factor. So what's happening is, rates were going up from 2009, they were coming down from 2009 through 2012. Every year they were dropping. But as the interest rates were dropping, the mortgage insurance was increasing. So we take the interest rate and their MI factor and blend that together to figure out how much money we can save these people on a refi. So we've used this FHA chart and built all these interest rates into our database, so we're pretty accurate on what their current payment is, plus their MI, so then we can show them savings and only mail to people that really can benefit from a refi right now.
That's great. Well, there's some questions coming in just in terms of these numbers and whether or not that they can get access to this. And so I'll just make the comment now is that if you contact Jeff, Jeff can send you some of these documents, and you can email him at jeffbush@overflowworks.com, and we'll send a follow-up email to everybody so that they have all the contact information. But you're willing to share these documents with everybody, right, Jeff?
Sure.
Great. All right, so talk a little bit more about...
You can also look at, sorry, Dave, you can also look at, prior to June of 2009, obviously they can refinance their FHA loan and get their MI factor lowered to, I think it's 0.1% instead of, half or, 1.1%. Those people that had older FHA loans got so beat up with direct mail from hundreds of mortgage companies mailing them, and I'm guilty, I'm one of them, doing a lot of mail, that they kind of stopped responding, response rates went down. So we've been targeting people, after June of 2009. They're still paying a pretty high rate. They don't qualify for the MI reduction, but now that they have 20% equity, they qualify to get out of their FHA loan, no MI. So that's kind of what this is about.
Cool. Well, we got another slide here just talking about the differences in upfront MIP and annual MIP. Where are you targeting marketing borrowers in this particular segment, Jeff?
You know, we're mainly marketing 09, 10, and 11 FHA loans, but some of the 2012 loans, you know, if they're paying 4% interest rate and they've got a big loan amount, like a $300,000, $400,000, $500,000 FHA loan in some of the jumbo areas, I mean, they're paying 1.25, 1.35 in mortgage insurance. It's not a write-off, and these FHA borrowers want out of that mortgage insurance. So even though they're paying a lower rate, the MI is high enough to you can save them some serious money just getting them out of their MI. I just had a client of mine tell me he funded a loan in San Diego, California. It was a $600,000 loan amount. He took the guy out of an FHA loan, put him in a conventional loan, took his interest rate up 1/4%, and still saved the guy $500 a month just getting him out of the mortgage insurance. So it's not so much about rate as it is about rate combined with mortgage insurance monthly payment. That's where we're looking for the savings.
Hey Jeff, I know that you've done some $1 million or million mailings for large mortgage companies, but I'm putting up a poll right now just to kind of get an idea of the people that are on this webinar because in terms of your client base, how many of your clients are doing large numbers of loans, like over 75 transactions a month? Is it 50% of your business?
No, I would say 20% of my clients are doing 100, 500, 1,000 loans a month. I mean, only about 20% of my clients do the really big numbers. 80% of my clients are probably funding 10 to 40 loans a month, and spending some money on direct mail to get an additional 5 to 20 loans funded every month.
Great. So if you've got, in terms of dollar value and how much money you have to be able to enter this market and do it successfully, what's the minimum order that you have to place before you can really get the kind of response that's justifiable to stay in the market of direct mail?
Well, we like to say, hey, buy 10,000 mailers because there's a pretty big price break. It drops down to 60 cents a piece. So spend $6,000. Let's see if you get between 0.5% and 1% response, which is 50 to 100 inbound phone calls. And let's see if you fund 10 to 20 loans out of that. If you fund 10 to 20 loans for $6,000, my clients are pretty happy. We do 5,000 mailers. That's our minimum order at 70 cents a piece. It's $3,500. But there's a big price break to 10,000, and a lot of my clients will drop 5,000, this week, and then wait a couple weeks and drop the other 5,000. So I'd encourage people to test 10,000 mailers. I mean, for $6,000, if you fund 2 loans, you're basically at a break even. So if you can fund 10 or 20 loans, you're going to make big profits. So that's a good number to test. We'll do 5,000 for $3,500, but yeah, I'd encourage my clients to do 2 drops of 5,000 just to get the better price point on the mail.
Great. Well, if everybody can go ahead and cast their poll, and we'll move on to this slide you have here, Jeff, in regards to FHA to conventional data, the top 20%, breaking it down by yearly savings. But go ahead and cast your vote, everybody, and we'll move on to the next slide. Great. Thanks, everybody. We'll close it up in 5 seconds. Jeff, talk a little bit more about some of the campaigns that you've done here recently, moving people from an FHA loan into the conventional loan.
Yeah, so do you have the slide that you can show? I'm just seeing the poll still, and I want to reference a couple things on that slide.
Yeah, here you go. There we go.
Yeah, I'm seeing the...
Okay, we got it now.
Okay. So, yeah, this is probably the most important slide of this webinar. Okay, so let me tell you what's been done here. Dave, we have another slide, I think, that's sorted by first name that starts with all the people on the mailing list with A's. Is it prior to this one or after this one? Maybe I had them reversed. I wanted to show a couple different variations of this. But this is a live mailing list out of the state of Virginia for a client of mine, and it's showing basically how we put together this database. Here we go. So, this client mailed 10,000 mailers with me. And what I've done here is I sorted the list by first name. so it's alphabetical by first name, and just showed a random sampling of 30 names on this mailing list. So, the first person on the list, you can see, he has a loan amount of $294,000. He funded his loan with FPF Wholesale. The loan was recorded December of '09. So the average interest rate at that month was 6.11. So we show what his old payment would be based on 6.1 interest rate. His MI factor was 0.55, so he's got a $135 a month mortgage insurance payment. So we're basically showing his total payment of $1,922, and then we're showing him, hey, if you refinance with us today, I think this is 4.25 or maybe 4.5 or 8. Your new payment's only $1,449. You're going to save $473 a month and $5,600 a year. Some of this data is built with the FHA interest rates, the mortgage insurance factors, so you'll see, just a random sampling. There's another guy that funded a $526,000 loan at 4.8, but his MI factor was 1.1, so he's saving $682 a month. This is literally just a random sampling, alphabetical by first name, of how much money these people are saving monthly and yearly. So this is why the mailer works so well, is showing them the benefit. It's all about, the offer on direct mail. The list and the offer is what makes it or breaks it. So great list, great offer. So this is the data, just kind of a random sampling by first name. But the next slide, Dave, is basically once I put all the interest rates and the MI factor into the data, now I can sort this list by who's going to save the most amount of money. So this list is sorted by, I think, monthly or yearly savings. So you can see the first person on the list. He's got a, oh gosh, what is that, a $619,000 FHA loan with B of A that funded November of '09. He's paying 6.25 rate. He's paying $288 in mortgage insurance. So this guy's going to save $1,000 a month if he refinances this loan with you. $12,000 a year. So this list is the same list, just sorted by who's going to save the most amount of money. And you can see these are all $900 to $1,000 a month savings. These are big loan amounts, I guess a high-cost area of Virginia and Maryland that have, the bigger FHA loan limits. So, these are the people you really, if you do one of these loans, you're going to make money on the campaign. So we're going to show you what our thoughts are on really getting the response from these big loan amounts that can save the most money.
Great. Well, in terms of some of the handwritten stuff that you've done, this is some of the most creative marketing that's been introduced recently, is that you've actually got actual handwritten marketing letters, marketing envelopes that you're doing to really increase the open rate to the point where it's almost like 99%, I think you said the other day. Talk a little bit through how this personalized strategy is helping some of your direct mail campaigns get a better open rate and return on investment.
So our thought is that, let's say we have a 10,000-piece mail campaign, and we can mail a simple letter and envelope with a window envelope, or I can mail a snap pack, and I can get you 50 to 100 inbound phone calls, a 0.5% to 1% response on a normal direct mail campaign, and that's great and it's profitable. But we've kind of been looking at this going, hey, now that we know exactly how much money you're going to save these people per month, why don't we take the top 20% of the mailing list based on what they're going to save per month or per year. It's typically going to be the people paying high rates, high mortgage insurance with a huge loan amount. And let's go ahead and separate out 20% of the data and mail those in a hand-addressed envelope with a 46-cent stamp, knowing that, you're going to make a lot more money on those loans. Let's make sure they open the envelope and spend a little more money marketing to the people that you're going to make the most money on. So this is just a sample of the hand-addressed envelope. So it's kind of the 80-20 rule. We're taking 20% of the list, mailing them a hand-addressed envelope with a 46-cent stamp instead of just a window envelope mailer. And either one can be effective, but this is something new that we are testing right now and had some success with it, a better ROI, spending a little more money on the mailers, going to the big loan amounts. So.
Well, we've got another, like a snap pack here. I believe that this is a snap pack, and it's got some blacked out information, but this is a real letter that you did. What was the response rate on average when you did this letter?
In tougher areas like California, we're only getting a 0.5% response, but, some areas of the country, like Nevada, I got a 1% response. So I tell my clients, hey, figure between 0.5% and 1%. You know, you can see that this letter is all personalized based on the data that we pulled together. So we're showing them, here's your current payment, here's what you're paying for MI, here's your total payment, here's what we can do for you if you call us now to refinance. And then on the outside of the snap pack, we say reduce your mortgage payment by $6,168 per year. That gets their attention. It's a huge yearly savings. So this is one of the letters that we've done that's been real successful. You know, FHA conversion loan offer, it's something, you know, they've been seeing letters about FHA streamline with interest rates for, they've seen a lot of those letters over the last couple of years. So our message is just kind of something new and different that resonates with these people and lifts our response rate.
Jeff, a question from one of the panelists is that how much are the handwritten letters for the top 20% of a 10,000 piece list?
Well, a normal mail campaign's around 60 cents. If you want to hand address the envelopes and put a first-class stamp on there, I believe it takes it to $1.25. So it doubles the cost of the mail, but if it doubles your response on these big loan amounts, it's going to make you a lot of money. So that's the thinking. And I think I've got a slide that kind of breaks down pricing on this thing. If we only hand address 20% of your letters and mail a normal letter to the other 80%, I've got some kind of average costs on what that looks like coming up here on another slide.
And you split that out so it's a real good test so that they can know which ones you've handwritten in that.
Yeah, I mean, we'll send them a copy of the list and go, here's the 80% we mailed a window envelope letter to, and here's the 20% they got the hand addressed, you know, so they know. And then when they get their calls, they could figure out which letter they got and kind of track the response. Let's see if we get double or triple the response out of the handwritten letters. It might be worth mailing all these people the whole list with a handwritten letter. But I'm like, right now, I'm like, hey, let's just mail the ones that are saving $500, $600, $800, $900 a month, knowing there's just so much benefit. We want to get them to open the envelope. So,
well, and you've got some other strategies that you've used in terms of call recording and 800 numbers that you can set up your clients with. Do you want to talk about that at all?
yeah, I've got a couple hundred toll-free numbers that I can make ring to your cell phone or your office. So if you wanted to test, you know, half the mailers hand addressed and half the mailers in a window envelope, we could use two different toll-free numbers and show you an actual call report of how many calls you got, caller IDs, names, record the phone calls so you can play them back. There's all kinds of options with toll-free numbers, you know, that we can use for tracking purposes. If somebody wants to do that, we're pretty versed in that deal.
Great. We showed another version of that FHA letter, but let's just jump over to the check letter because this one's been a really good letter for you as well. You want to talk about that?
Yeah, I just had a client mail this letter, emailed 10,000 pieces, and he had 92 inbound phone calls. So anytime we're anywhere near 1% response on mortgage mail in this competitive world, I mean, we're pretty excited about it. So what we did on this letter is we figured out what their payment was now, their total mortgage insurance compared to a new payment, and we figured out how much they were going to save per year, which in this case, it's another big loan amount, $585 loan amount in California. So they save, you know, $10,739 for the year. So we actually put that number into a check and say, look how much money you're going to save per year, and this check kind of shows through the window envelope. So this has probably been my most effective mailer for FHA conversion. Sometimes compliance doesn't like showing these checks. I mean, we have disclaimers in there that, you know, obviously they can't run down and cash the check. This was a pretty aggressive letter. It's been my biggest response, but sometimes compliance is like, we don't like the thought of a check being on there, so I have to tone it down a little bit, and we can work with your compliance and make sure that they sign off on it, but this has been a real effective letter.
Great. Well, here's that slide that you talked about, comparing the two different options and just, you know, giving kind of a side-by-side comparison as to what that looks like. You obviously have some pricing up there, and you can get more specific pricing by contacting Jeff and going through the specific scenarios. But walk us through this comparison, Jeff.
Okay, so what I'm showing you right here is a 10,000-piece mailer, the best one I've done and the worst one I've done. So the range is, you know, I got 40 calls on one campaign. I got 150 on another. You know, some of my clients close these leads at, you know, 6 or 7% closing ratio, and some close at 20%. A lot of that has to do with who's taking the phone calls, are you answering the calls, what are your rates and fees, are you competitive in the marketplace. So closing ratio can be just all over the place. So, this shows on a 6,000 piece mailing, if you can make 120 grand or if you're going to make 24 grand. And it's just different response rates, different conversions, on the same type of mailer. So it just kind of shows you what the range has been for all my clients. If we move to 10,000 mailers and we hand address 20%, we've averaged the cost out at 75 cents a piece. So 60 cents on the window envelope mailer and $1.25 on the portion that's first class with a stamp. So you could do 10,000 mailers for $7,500. It increases the cost, $1,500, but we think the response will be enough. One more funded loan for a $400,000, $500,000, $600,000 loan amount would well pay for that extra cost. Or you can do 5,000 and we can hand address the top 20% for $4,250. So that's just how the pricing comes out, averaging out, hand addressing the top 20% by monthly savings or yearly savings.
Well, Jeff, we got about 10 minutes left, and I know that people are already kind of chomping at the bit, but they've got some additional questions about who Overflow Works is and who Jeff Bush is. So would you just take a minute and just kind of share a little bit about your company and about you and what the differences are between your services and other direct mail companies that are out there?
Sure. So, Jeff Bush, I own overflowworks.com. I've been doing direct mail for mortgage companies for 20 years. I used to mail 36 million pieces of mail per year for Ditech that was funding 10,000 loans a month. So that was my biggest client. And then I've worked with hundreds, possibly thousands of brokers around the country that mail, 5,000, 10,000 pieces. I sold a direct mail company in the year 2000, and I had to get out of the business on a non-compete for a couple of years. So I jumped into the mortgage business, and so I owned a mortgage company for 7 years, and I used to spend $100,000 to $200,000 a month on direct mail, and I was funding, 100, 130 loans a month with a $20 million warehouse line and an escrow company. So, I've been on the mortgage side buying direct mail. I've done direct mail for 20 years, millions of pieces. So I just understand this more than pretty much anyone, if I could say that. Not too many direct mail companies are out there reading the mortgagee letters, figuring out what the niche is and how to build the mailing list and how to go design the mail piece to get the most amount of calls from qualified buyers. I read mortgagee letters. I'm looking at FHA HUD rate charts and mortgage insurance factors. So, I do direct mail. I tend to be a few cents higher than your average, printing guy, but I can get you more calls and more closed loans by targeting the data better, writing a better letter. So, that's kind of my background.
Well, I know this from personal experience, though, is that you also are able to give some business consultations to, small to mid-sized companies that are trying to grow their business and really trying to, bring on some additional staff members and just increase production by just sharing best practices with them. So I'll throw that in there. I'm going to throw open this poll here for about another 5 seconds or so, and I know that right now, Jeff, your schedule is extremely tight and that you have other staff members that you can end up having follow up on people that are interested. But if you'd like to have a conversation with Jeff specifically, would you go ahead and vote on this particular poll so Jeff knows who the serious players are that really want to get more information? You can always email or contact their company and talk to one of Jeff's staff representatives, but if you want to have that conversation and really get serious about a direct mail campaign, please go ahead and cast your vote in the next 5 seconds, and then we'll move on and talk about non-owner HARP marketing and this FHA purchase business, Jeff. So thanks, everybody, for your polls. So we got some additional questions coming in, and I'll just say it one more time for some of the latecomers. If you have a question about marketing or about what Jeff has talked about, please go ahead and submit that in the GoToWebinar control panel, and we'll stick around after the webinar is over, and we'll answer some of those questions. So close up the poll in 5, 4, 3, 2, 1. Thanks, everybody. Well, Jeff, let's go ahead and transition to talking about non-owner HARP and what kind of got you into that niche and what's keeping you to be successful inside of it.
Sure. So we've done millions of mail pieces to Fannie Mae and Freddie Mac owned mortgages between 04 and '09 with the right loan dates, and we go out and confirm that Fannie Mae owns the mortgage or Freddie Mac, your choice. We're one of the only companies that can offer you that data. But what's happened is because this HARP program's been out for a year, just like everything else in the mortgage business, these people have received 5, 10, 20 letters about refinancing their HARP loan, so the response rates have gone down. The only borrowers that are left out there, owner-occupied HARP, that haven't refinanced, most of them have problems. Short sale, loan mod, foreclosure, bankruptcy, serious problems. So you can get a bunch of calls and you won't fund any loans. So we started marketing to some of the non-owner-occupied HARP loans. These people have a 760 or above FICO score, and people that have this product to refinance a non-owner-occupied HARP loan. We've just seen a big success on the mailer because it's not saturated, and we're getting a big response, and the borrowers are pretty clean credit-wise. So we've had a lot of success. So we've been offering, in some cases, where we will guarantee you, 100 incoming phone calls for 10 grand. It's $100 a call, but these people are interested in refinancing, good credit scores, guaranteed to be Fannie Mae-owned mortgages that qualify for HARP. So it's the one campaign that we've done with a guarantee number of phone calls, and it's just been, if you have the product, if you have a lender that can do unlimited LTV HARP on a non-owner-occupied property at a decent rate, like around 5% right now, this could be a way to guarantee you incoming phone calls where you're going to make some money on this campaign. You're going to get calls and close a bunch of loans off it. So these are the counts around the country for non-owner HARP. So that's kind of the basics on that.
A couple of questions from the audience, Jeff. One of them is that talk about exclusivity in terms of data and how many times you resell data, if at all, and then talk a little bit more about the validity of, or the comparison of your valuations versus other valuations in the market, and how close you are.
Yeah, those are good questions. So let's see, exclusivity. If you do a mail campaign with me, I make sure to protect your data for 90 days, so I don't allow anybody else to mail. I'm never going to buy one list and sell to 2 mortgage companies. I mean, the list costs a few cents a piece. It's not worth it for me to, hurt someone's response or mail on top of each other. So we give you a 90-day exclusive on whatever data you mail. And the other question about, you were saying valuations, meaning what the home's worth compared to the loan amount, how we come up with LTVs. Is that what you were mentioning?
Right.
So we pay some extra money to have AVMs run on our entire mailing list so that we can get a somewhat accurate value of the home, because this FHA conversion, obviously it's really important that they have 20% equity. So we use the same basic valuations for an AVM that like Zillow uses. So we pay some extra money to get the value of the home on our mailing list. And it's an AVM. It's not 100% accurate, but it's been close enough to where, my clients are like, yeah, Jeff, they're calling there at 70, 75, 78. Every once in a while they get a call at 82% LTV. None of this data is ever perfect, but it's close enough to get enough calls and enough closed loans to make it profitable, Looks like we got a sample of the letter up here, one of the non-owner-occupied HARP letters that we've done, and then some owner-occupied HARP letters, just some sample mailers that have worked well.
Yeah, in terms of these particular letters, is there anything niche specific that you'd like to talk about before we jump into the new updated FHA marketing?
No, I think we can go through more details if somebody wants to set up a conference call with us and go through more. So I think I'm running a little late on time, but nope, it's long-winded this morning. So maybe we can move into this little purchase opportunity really quick.
Yeah. And as we answer a couple, we have got questions coming in. Thanks, everybody, for submitting questions. But this is another good one, Jeff, in terms of how do you know whether or not the person is already refinanced in terms of your data?
Well, the most important thing we're looking at is the loan recording date against the property. So if they funded a FHA loan in December 2010, we know their interest rate, their mortgage insurance factor. So if they just refinanced, a month ago, there'd be a new loan date, and they would come off our list. So we're specifically targeting by loan recording date against the property. If they refinance, there'd be a new date, and we wouldn't mail them if they can't benefit from a refi.
And your data is updated every month, typically?
You know, depending on the county, like in California, our data is updated daily because everything's electronic and they get a feed every day. Some rural areas across the country, they might be updated every month. Some might be updated every 90 days. So, again, the data is not perfect, but, you know, 99% of the phone calls are within the range we're looking for, and we allow for a little bit of discrepancy. But I know that's an important part of making this work, so I've worked hard to, you know, update the list as best as possible out there.
We'll talk about some of the data, the numbers that we're showing here for discharged BKs in the last 5 years.
Yeah, so this is a list of everyone who's discharged a Chapter 7 bankruptcy in the last 12 to 60 months. So the fact that we can offer these people go buy a house 12 months after your bankruptcy discharge with 3.5% down and go through FHA, this is a huge opportunity. I mean, 606,000 people in California have discharged a BK in the last 12 to 60 months. So these are all people that are all of a sudden, they can go buy a house again, you know, where a lot of these people are sitting at home waiting out their 3-year waiting period. Their loan officer told them, you know, you can't buy another house for 3 years after your BK foreclosure short sale. Now all of a sudden we just put all these people back in the market. I mean, Florida, I saw, what was Florida's numbers? I missed it, but I think it was, you know, 500,000 people in Florida had a BK. So all these people can be homeowners again with this new program. That's a big deal. I reran these numbers like 12 to 36 months just out of curiosity. So discharge BKs 1 to 3 years out, and the numbers cut in half, but there's still, you know, 300,000 in California. I mean, these are big numbers of people that can now go buy a house they couldn't before. So, yeah, Florida, 293,000. So huge amount of people that are back in the market to buy a house that don't know it. So if we can mail them my letter and say you can buy a house 12 months after your BK short sale foreclosure, you're going to get a huge response and have a bunch of buyers that you can send to your realtors. Or if you own a real estate company, even better, you can represent the buyer and make a double commission on it, the loan and the real estate. So I just started testing these mailers, and I sent out a letter for a client of mine. This is Envoy Mortgage, a little office here in Temecula, California. And we mailed out 5,000 letters and said, hey, call this number, find out if you're eligible to buy a house again after your short sale bankruptcy foreclosure. Buy a $310,000 home for only $1,500 a month. And we kind of listed, this is funny, we listed how long you have to wait after your tragedy on your credit to buy a house. And this whole mailer talked about, hey, 3-year wait for FHA, 2-year wait for, you know, VA, 7 years for conventional. So I did this mailer a couple of weeks ago, and we got a good number of phone calls. We got people coming in with all their loan docs that want to get pre-qualified. Hardly any of these people had a realtor, which I found interesting. So we're able to send these leads out to our real estate partners. You know, home purchase offer, government loan. We mailed to people that were renting homes. We stayed away from apartments and just said, I want to make sure they're renting a home. They're paying a lot of money in rent. They you know, typically have a little better credit. They had to come up with first and last month's deposit, so they can probably scrape together 3.5% down. And we've got a bunch of people walking into this office with all their docs, and we're sending out with our realtors. And we're probably, you know, we got about 20 phone calls on a little 5,000-piece mailing campaign, and we've had about 4 people come in. So I'm thinking this mailer just hit on Monday of this week, and I'm only counting calls for 4 days. So I think we'll end up getting 0.5% response. 25 calls on 5,000. We'll fund 5 loans out of it. But if we can pick up the real estate commission and get a few more referrals from our realtor clients, this could be big for us.
That's great. Well, in terms of a couple last questions before we wrap up here, Jeff, talk a little bit more about using pearls and just whether or not that's a good strategy, or if you're finding that phone numbers are a better strategy to put on letters.
I've done pearls before. I'm not a big fan of them, only because if you give someone a website to go to and they go to some website and fill out all their information, now you've got to call them. So what you did is, instead of them calling you and getting them live on the phone and being able to talk to them and sell them, Now you basically turn them into an internet lead where you got to outbound call and track the person down, and that's tough right now. People are just busy not answering their phone, answer machines. So I don't really like pearls because I want to drive as many incoming live phone calls as I can. As soon as I give them an option to email me or go to this website and fill out your information, now it's an outbound phone call. I have had clients that say, Jeff, we get a few extra responses by using pearls, so we want them and we believe in it. So I guess it can work both ways. I'm just not a big fan of taking an incoming phone call and making it a form that you got to call somebody back at. So that's my theory, but we can do them if somebody wants them.
Great. Well, and for those of you that are asking what a PEARL is, it stands for personal URL. So you're getting a personalized website for every customer you're mailing to. And Jeff can give you more details on that if you have more questions about a mailer. But we've got some next steps here, Jeff. Talk a little bit more about the BK mailer cost if they wanted to test that out. Same pricing as the FHA mailers from before?
The bankruptcy data is going to cost about 5 cents more per piece to buy the public record bankruptcy information with the discharge date, the type of bankruptcy. So it's a nickel more if they want to target these bankruptcy people. If we decide to just mail people that are renting homes, we know, why are people renting? Because short sale, foreclosure, bankruptcy. So we can just mail people renting homes and then it would be the same price. I think this bankruptcy list I'm pretty excited about, and I think it could be, a higher response rate. So we might test, mailing just regular old people renting homes and then test some bankruptcy data at the same time and see if the response is double and more deals. So yeah, 5 cents more for bankruptcy data. If you want to mail a direct mail piece to just people renting homes, not apartments, we can do that at the same price as the other letters.
Great. Well, thanks everybody for joining us and for sticking around a little while after. We appreciate all the questions, and for those of you that we didn't get to your question, just please feel free to give Jeff a call. Typically after these webinars, we do have a lot of incoming phone calls, so we will have one of Jeff's representatives get back a hold of you as soon as possible. If the phone is busy, it'll go to voicemail, but please do leave a voicemail and one of the representatives will get back to you as soon as possible. Jeff, any final parting words?
No, I think I covered everything. Shoot me an email and give me a couple times you're available for a conference call, and we'll set up some conference calls for tomorrow or anytime next week. Email is kind of preferred method of contact because I can respond to you and answer some questions and send copies of letters, the presentation, set up a time for a conference call. That'd probably be best. So
great. Well, thanks for your time today, Jeff. Thanks for everybody for participating. And if you need more information, go to overflowworks.com or give Jeff a call. Thanks, everybody.